Rohit, coming to you, what are you making out of this growth downgrade that IMF has done?
I think it's very much in line with reality. If people didn't see it coming, then it's a reality check. Essentially, I think we are slowing down. That is a fact, and it's not just us. It's going to be the US also, which is growing much slower than what they anticipated at the start of the year. And with the ongoing situation, irrespective of how it ends, it means one thing, that it's going to grow even slower in the months ahead, at least for this year. So I think we have a slowdown in growth everywhere, and as far as my outlook on the market is concerned, I think what we are looking at is a major equity market sell-off around the world building up. It's probably showing up more clearly in the US right now, but I'm pretty sure it's going to spread to other parts of the world, and India itself should be seeing much more downside first before we get any upside.
Okay. For traders, probably who are looking at shorter term swings right now, where is it more attractive in terms of a risk reward?
Yeah, so what we are thinking is that 5980 is probably the top of the market, which we saw yesterday, and we should be selling from here. We're looking at building shorts in sectors like banking, which has been the weakest, and also in autos, which are been trying to hold up a little stronger, but we see weakness coming in there. And then also in probably capital goods, which is also among the weakest sectors.
Okay. SV?
But at least unwinding the self-inflicted problems must clearly be the focus.
Right. Rohit, I want to come to you on banks, particularly after yesterday's fillip that they got with the MSF rate cut. It looked like the excitement was pretty short-lived, because towards the end of the trading session, SBI actually ended 1.5% lower for the day. What's your take? And I think you've got sell calls on SBI and ICICI Bank as well.
Yeah, like I said, banking has been the weakest segment. You got a pretty good bounce back in private sector banks as well in the month of September. However, after that, once we sold off in the last 1 week, I think the bounce back was pretty narrow last week, and it's just given one more opportunity to sell. As far as the recent rate move is concerned, I think it's just going back on what they did in the month of August when they took those steps, and it was around these levels, 62 odd, where they actually put those rates in place, and you're back to that level. And I think most people thought it was not a good measure, and it was a good point to just do away with it and move ahead with alternative policies. So I think in that sense it was good, but it's not something which is supposed to have a huge positive impact for banking, because it wasn't a measure really directed at that.
Rohit, let's come to you. Anything within the broader markets right now that you'd probably even look to sell, if not buy?
See, I'd really like to mention specifically on the question that you just asked, that is the tech sector. See, the tech sector is being taken up as a defensive by most fundamentalists, but somehow I strongly disagree that it should be seen as a defensive sector. You must realize that the CNX IT index today is exactly where it was in the year 2000, that is almost 10 years ago. And coming to the same level, then are you really looking at significant continued growth? I think the risk is to the downside. My view for some time has been that the IT sector is in the process of topping out long term, and the key driver for IT sector is essentially global growth, and if that is at risk, then I don't know how risks can be not be overstated as far as this sector is concerned. Simply looking at it as a currency play might not be the right way to look at it. So I think the tech sector in general for medium term should be a sell. Okay,
got that. Rohit as well as SV, thanks very much for joining us. Appreciate your time, both of you all. For the Nifty as well as the Sensex, we're under by about 0.5%. Nifty is at 58.97, just making its approach.